Hello and a very warm good morning. You're watching News9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. First up, let's begin with markets. To my left is Suyash Maheshwari. Suyash, markets opening in red once again.
Yes, Shweta. So the markets witnessed another gap down opening in this morning's trade, with Nifty opening below 19,900 levels and Sensex dropping as much as 300 points in the opening trade. Now, this was on the back of a negative handover from the US markets, where we saw a 1.5% decline in the tech-heavy Nasdaq, and the S&P 500 also fell about 1%. On the back of that, there was the Asian market shares also had a sluggish start this morning, and most of them were trading 1% to 1.5% lower. Now, since the opening market has extended losses and Nifty currently is below the 19,800 level, whereas Sensex is below the 66,500 mark. Now, according to experts, the near-term support for the Nifty will be 19,700. So unless the index is able to defend that, we won't see any sort of a bounce back, and the sentiment is expected to turn bearish. On the upside, the all-time high levels of about 20,200 levels will remain key resistance levels to watch out for. Now, shifting focus to the broader market, Shweta, the broader markets today have bucked the trend in the headliners, and both Sensex Nifty mid-cap 100 and the Nifty small-cap 100 were trading with marginal gains of about 0.2 to 0.3%. India VIX also saw a marginal spike of about 0.42% and was about 11.18 this morning, which is below the 12 mark, indicating that volatility is still low despite today being a weekly expiry day for the markets. Now, shifting to the sectors that were in action, most sectors were trading in the red, Shweta. It was a sea of red, as we keep mentioning. And banking stocks, financial stocks, especially the private sector banks, were under pressure this morning. Also, the IT stocks were under pressure. On the other side, the PSU banks continued their run, and they were up about 1.5% in the morning. Also, realty shares were trading marginally higher this morning, Shweta.
All right, that of course is the lowdown of how markets opened this morning. Joining us is Sudip Bandyopadhyay, Group Chairman, Inditrade Capital. Sudip, thanks very much, sir, for taking time out. I want to first perhaps begin by asking you to explain to us, are we entering a consolidation phase, a much needed consolidation phase here?
You're absolutely right. I think the word which you use, much needed consolidation. I think Indian markets have rallied quite a bit from where it was. Last one and a half months have been a little bit of roller coaster, but undoubtedly the rally was strong. There was a definite positive bias in the market, and at every dip, buying was coming. Then we broke out of that zone and we crossed 20,000, and we continued to soar above 20,000. At such elevated levels, some amount of profit booking, some amount of consolidation, I think, is par for the course. And it's a sign of a healthy market that, there's some bit of consolidation is happening at the current levels. Of course, the global headwinds and global news flow contributed to the consolidation. But I would rather say that we were waiting for some trigger or the other to kind of, consolidate, correct, profit. And that's pretty much what is happening. Fundamentally, there is nothing wrong as far as Indian economy, Indian capital market is concerned. Of course, there is a concern about oil prices moving up, and that does create challenges for Indian economy and Indian companies by and large. But beyond that, I think things are looking pretty good. Monsoon finally has caught up, and probably will end up with a zero deficit kind of monsoon, which is definitely good news for Indian economy, Indian capital markets, and most of our Indian corporates as well. So I think by and large, we maintain our positive bias in the market. A consolidation like this probably is a good opportunity for long-term investors to also look at accumulating good quality stocks.
All right. A big trigger that is coming in by the way of global cues, before we go to macros, domestic cues, is the FOMC meeting. The US Feds have decided not to hike interest rates, Suyash, this time around.
Yes, Shweta. So the Fed has maintained the key rates, for the second straight policy meet. And I mean, there are two major takeaways that we can get from the policy outcome. Now, the Fed said that it will keep interest rates higher for longer. Now, Mr. Powell indicated that there will be about 2 rate cuts heading into 2024. Now, earlier they had indicated that there will be about 4 rate cuts. So that will be a major negative for the markets, as investors were banking on monetary easing heading into 2024. Now, the second thing is that Fed also said that it could consider hiking interest rates one more time when November rolls around. Now, this is again because inflation continues to remain a pain point for the Fed, and now the problem is there was expectation that Fed may consider hiking rates, but it seemed like a distant possibility, as only about 30 to 40% analysts were expecting that. Now it seems that that could be the way forward, that Fed may hike interest when November rolls around. So perhaps a negative for the markets, Shweta.
All right, negative there for the markets, and the markets of course reacting negatively to that news. Was a rate, I think a status quo, Sudip, it was expected, wasn't it? That is what analysts, a lot of them we've spoken to here on Newsline, have also said over and over again. No rate hike perhaps this time around, but near future and how inflation pans out to be, whether it comes within US Fed's comfort zone of 2%, will determine the future rate hike cycle.
Absolutely right. But look, I think as Suhas was mentioning, I think the commentary of the Fed chair and a little bit of an aggressive stance as far as rates are concerned, that did make the market a bit worried. Expectation was that the body language and the commentary will be also a little subdued. There won't be any aggression as far as interest rates are concerned. But I think the commentary of the Fed chair is what kind of rocked the market. And very clearly, I think there will be more rate hikes. And the rate reduction cycle, rate reduction probably gets pushed back a bit more than what was originally expected. That did cause the damage as far as the Nasdaq is concerned, and even other markets.
So, what's your assessment of this higher rates for longer narrative? Now, this will definitely be a negative for markets, but how do you think it will impact emerging markets, especially India?
Well, Suhas, I think the way I look at it, FIIs, FPIs have been investing in India, and they will continue to invest. Of course, there will be volatility, as is always with these kind of flows. But if you look at a slightly medium to long-term view, what is happening globally is that emerging markets, funds have started attracting a lower amount of incremental flows, and that's predominantly has got to do with what's happening in China, whereas India dedicated funds have been attracting higher incremental flows. I think this trend is going to continue, and I think if one goes to interpret this trend, it's very clear that India will continue to attract more and more money as time goes by. Yes, there is definitely a fear and a rush to withdraw funds out of China, and some of that money will definitely find their way into India. That will be some of the funds will be long term there, and some will be short term funds as well. So volatility will be there, but India will continue to attract FIIs flows as we go along in this fiscal as well as the next fiscal. That is our reading. We also believe that Indian corporate performance has improved significantly over the last 1.5 years, and that does put India in a slightly better position vis-a-vis many other emerging markets. Also, by and large, the strategy of global corporates of China plus one is helping India in manufacturing and Indian trade, and this will continue. Now, this again indirectly will work towards attracting incremental business for Indian corporates and more inflow into Indian capital markets. So, if we put all this together in the mix, and keep that and weigh that along with the interest rate scenario, and interest rates may not be coming down as soon as we were expecting. I think on the balance, we believe that India will continue to attract money, and as is very clear with India dedicated funds getting more and more incremental inflows. I think that trend will continue in spite of what is happening as far as interest rates are concerned. One last point I would like to make is that, there was a lot of question marks over soft landing, and even now there are, as far as US economy is concerned. But if we look at the indicators, if we look at how the US Fed and the US economy is being managed, I think the soft landing is a distinct possibility. And if that happens, I think we need not worry about US liquidity and US flows.
Mr. Bandyopadhyay, I just have another question. Now, do you think that there is a lack of coherence between fiscal policy and monetary policy? Because at a time when Fed is struggling to, keep inflation under control, we have seen that, the fiscal spend has climbed to about 3% of the GDP. So, do you see that there is some bit of, the coherence is lacking between the fiscal and the monetary policy?
Well, that's unfortunately what you get when you have a democracy. US is also heading towards an election. And as we know, the compulsions in an election year are different as far as the political establishment and the fiscal policy is concerned. I think monetary policy has to balance that out. And that's what the Fed has been doing. I don't think we need to get too perturbed with that because US has strong checks and balances. And, as we have been reading that there may be a US government, unfortunate, but US government shut down because the allocations may not get approved. So all that confusion, all that, drama will probably get played out over the next 9 to 12 months because it's an election season and because the political tension is, equally high in US. So the Fed will have to keep doing the balancing act and trying to contain the challenges which fiscal policy poses from time to time during the next 12 months.
All right. And since we were talking about FIIs, I also want to briefly understand from you, Sudip, there is some buying interest there as far as FIIs is concerned in the past 1 month. Do you see, a larger investment coming into India in the capitals market in the near course? Because let's admit it, the interest has been subdued in the past couple of quarters. Is that going to reflect in the future as well as Indian markets remain volatile?
Well, I think if you look at a medium to long term, I think we will continue to attract FII inflows into India. There's absolutely no doubt in my mind about that. Short term, there are a lot of factors as we have been discussing, US Fed, inflation, interest rates, and also Indian corporate performances. So there are a whole lot of things which in fact influence FII decision on a short-term time frame. But there are other factors also. If you look at the recent data, which indicates a subdued FII inflow, net inflow, because a lot of old transactions which the foreign investors were sitting on are being unwound and profits are being booked. We have seen a flurry of PE exits from multiple companies. We have seen a lot of FIIs unwinding their old positions. Now, these definitely happen, and it's good for the market to happen because the overhang on the counters, because we know that sometime they are going to exit, and that's happening. But the interesting part is part of that is also being absorbed by new funds, new foreign funds, part by domestic investors. So it's an interplay of these things which will continue, and that's a very good sign for Indian capital market. But fundamentally, medium, long term, definitely a lot of incremental inflows will keep coming to India.
Okay. I also briefly want to touch on inflation, since that remains the underlying theme here in India as well as in the US. Crude prices are hovering around $96 to $97 a barrel. That, of course, will impact inflation in a big way in the US, at least to begin with.
Absolutely right. Even in India, why India is definitely, this is the one single largest item which does affect Government of India's budget. And crude at 95, 96 is definitely not a good development for Indian market, Indian capital market, and Indian economy as well. So that is a matter of concern, and we have to be cognizant of that challenge. Now, the inflation has multiple other components, and we have been struggling in India with food inflation, food price inflation, and that's one thing which needs to come down. And probably with a good monsoon and expectation of a good Rabi crop arrival, I think food inflation should start coming down. We have started seeing initial signs of food inflation coming down, and if that gets played out, probably it will get balanced out. Unfortunately, the oil prices have gone up, so we won't see a drastic reduction in overall inflation numbers, but probably it will get balanced out with food inflation coming down and oil prices going up. I think that's what the challenge is. Also, remember that in an election year, election season, oil price increase in the global markets may not and normally are not passed down the line, and the oil prices may not go up in the economy. The loss may get absorbed by the in different ratio by the marketing, producing, and distribution companies, and probably that will lead to less pressure on inflation, domestic inflation. In any case, we must remember that commodity prices overall have not moved up. So it's only the oil which is kind of a joker in the pack, which is going to create trouble. Rest of the components of WPI or CPI are and should come under control very soon.
Okay, and election year not just in the US but also in India. Karthik Malhotra joining us here in the studio. Another interesting story that we are picking up is, by the way, of India's rising exports to the US. It looks like India is beating China at it.
Yeah, so we talk about geopolitical sort of tensions across the world, and if you were to look at the battle between who exports more to the US between India and China, data over the last 4 years as compiled by BCG between 2018 to 2022, in fact, Shweta suggests that India has upped its exports to the US by as much as 44%. And the export volume has jumped up to about $23 billion. Compare this to the same time-bound period between 2018 to 2022, the exports from China to US have incidentally declined about 10%. Now, what the report also suggests, and this is something which I think should be good news for India going forward, because China got out of zero COVID only last year, 2022. End of last year, December 2022, and overall, if you look at the years preceding that, 2018 pre-pandemic to 2022, US finds it about 15% cheaper to import goods from India and just about 4% cheaper to import goods from China. So the cost of making products within the US versus exporting it either from China or India, India has an advantage of about 15% in price for US as compared to an advantage of only 4% when it comes to China. Now, which are the industries which have actually been firing? You've got machinery, heavy machinery. You've got auto components, and surprisingly, because again the data is 2018 to 2022, semiconductors. India's semiconductor exports to the US have jumped up as high as 143%, more than doubled and a half pretty much. So now I think
very surprising, given just about a year ago we thought we were unable to make semiconductors in India.
But I think what worked for India was that China in any case was shut down. So what was the option for the West, especially the US? So I think now if we look at India's scenario in 2023, with hopefully, more semiconductor units coming up, with more plants being set up by way of whatever import restrictions we are putting on IT hardware, or trying to woo investors from the US to come and set up shop here in India, I think this story is only going to get better. So my question to Sudip is, hi Sudip, good morning, nice to have you here with us. I just want to understand this data from 2018 to 22 seems fairly positive, but the India story is only just beginning to shine when it comes to manufacturing. How do you see this export story playing out vis-a-vis China?
Well, I think you picked up a very interesting statistics, and we also believe that the subtle change has started happening from the last US president's time, when Donald Trump started bringing sanctions and started bringing restrictions on Chinese imports as far as US is concerned. The message to US corporates and US business was clear that the government and the economy and the country will prefer if imports from China is reduced. And taking the cue, a lot of Indian companies started getting many more orders from US corporates and US businesses than it was the case in the past. And this the data you put out, I didn't know about it. I think it's a fantastic point that we are 15% cheaper vis-a-vis similar imports from China as far as US companies and US economy is concerned, and that's very clear economic logic for them coming to India. The challenges in India were, I think, created by ourselves, the regulations, the bureaucracy, the red tape, and whole lot of other issues. But fortunately, those are being addressed and those are being taken care of in the recent past. And that does create a further opportunity window for India. I'm pretty confident that India will continue to gain upper hand as far as exports into China, into US is concerned, vis-a-vis China. I think at this stage, maybe to an extent overdone, but every US corporate which was importing from China wants to move out of China or definitely create a second base, alternate base. If you look at what has happened to a US corporate, they were in Russia, they were in China. And suddenly one fine morning, Russia did something funny and the sanctions were imposed on Russia. And they had to shut business, sell business at a huge loss and exit. Now for a US CEO, which has seen that this Russia episode getting played out in the last 12 months or 24 months, for him to continue with an only supply base being China, I think is an impossibility. And
Absolutely.
They definitely will need to diversify out of China.
Right. So I just want to bring your attention also to this new spice route that India and the West is all very bullish on, the IMEC, India, Middle East, Europe corridor. How do you see the trade balance really shifting in favor of India as this new IMEC comes pretty much in competition to China's Belt and Road Initiative?
Well, I think it's a good initiative, I will say, but I will be very cautious here. China's Belt and Road Initiative led to a lot of challenges as far as China is concerned. And they earned a lot of, for lack of better word, bad will instead of goodwill out of this project across the world. That may not be only because of the Belt and Road, but combined Belt and Road Initiative along with their geopolitical activities did a lot of damage as far as China is concerned. And I think it was not a very successful venture as far as Chinese government and Chinese industry is concerned. Some of the projects which I understand were a disaster even for Chinese corporates which went in and lent money to. We have to be careful. The economics of the entire thing needs to be very carefully worked out before Indian corporates and Indian government ventures out into that. As a concept, I think it's a great concept. It's a counterbalance to the Belt and Road Initiative. And with the world supporting, particularly US and UK and many other powers supporting this initiative of India, I think it's got a better chance of success, provided it's done realistically, provided it's done without any geopolitical tensions, and financially it is ensured that there are no major hit to either the countries over which this route is going, or the mover of the initiative, which is India. Because if it's that is the case, then long run it doesn't survive.
Now, Mr. Bandyopadhyay, I just want to bring back the conversation to the PSU banks. Now, PSU banks have been on a bit of a bull run since the start of the financial year, and like sifting through the data, it seems that the smaller banks are currently trading at a higher price to book multiples than some of the prominent names like let's say a Bank of Baroda or an SBI. So I have two questions here. First, why is that the case? And second, that do you expect these bigger banks to play a catch-up rally from here on?
Well, I've been bullish on State Bank and Bank of Baroda for last 1.5-2 years, and I've been recommending investors to get into these stocks. And even now, I maintain my view. Even now, for a long-term investor's point of view, buying into SBI and Bank of Baroda is a good idea. As far as some of the other banks are concerned, while a lot is being said and talked about, I would say that if you look at, let's say their historic highs. Now, a bank like Canada Bank is nowhere near its historic high. And it's a large bank as well. Now, there has been a lot of challenges and fundamental issues as far as PSU banks are concerned. The governance, the efficiency, the profit performance, the asset quality issues, all those have been major challenges. And I think there is a confluence of positive factors at this stage, which is taking up the PSU banks and even the smaller PSU banks State Bank of India, Bank of Baroda are definitely good banks and they can compete with many private sector banks. But some of the other banks, like a Canada Bank, like a some other banks, I think they are also in a very, very good wicket. And I don't believe that their valuations are stretched as far as some of these banks are concerned. But one has to be careful, of course. Two reasons. One is, there is an euphoria. Prices have moved up too much. And some consolidation at some stage is welcome and should happen. The second is, the balance sheets, though looking repaired, there are a lot of, assets which still may give them trouble in the near future. And also some of the lending which is happening now, when there is an euphoria overall in the economy, turns out to be a bit of a challenge when tide turns. So one has to be extremely careful as far as some of the smaller PSU banks are concerned. I'm not saying the rally is overdone, but a pause may be warranted.
All right, a pause may be warranted. Sudip Bandyopadhyay, absolute pleasure, sir, listening to you. Thank you so much for taking time out. We look forward to having you back on Newsline. And thank you to you as well, Suyash, for bringing us all the markets update every day. But on to our big show that you can look forward to every day at 10 p.m. and again at 3 p.m. the next day. The Duologue series starts on Connected TV from 22nd of September. Here's a sneak peek.
Do you have a very simple SOP?
If you put filth at the mango tree's root, it becomes sweet mango.
Spokesperson like Sania Mirza written about more than the women's cricketer.
Journalist, for some reason, doesn't like an athlete. The narrative is very different.
So why have people been so much enticed to come and take over your businesses?
लड़की सुंदर होती है तो उसके पीछे बहुत लड़के आते हैं.
To us normal people, the doctor is somewhere in between us and the God.
When a patient's mother touches my feet, begging to save her child's life, I don't feel empowered. I feel humiliated.
Is it fair to call you an Indophile?
Very much so.
What about China?
A local problem is a global problem.
Suppose if you had donned the seat of the chairman, maybe by now Oxford or Cambridge would have had chairwoman as a legitimate English word.
She is the most qualified.
Giving good value system to children was more important than career.
How do you deal with success and failure?
First thing is to clearly know what you want in life.
Who is Lutyens Media?
It is a bunch of people.
What has Khan Market got to do about
Just
it?
a function of its location.
Duologue with Barun Das, world premiere on Connected TV from September 22nd to 29th at 10 p.m. Only on Newsline Live, India's first and only digital exclusive English news stream for Connected TV, supported by Alliance Broadband.
All right, that show starts 22nd of September, but shifting focus to a story that we're tracking by the way of job creations in India and formalization of economy. With me is Amit Ranjan in the studio. Amit, it appears that in the month of July, we've added one of the highest numbers of formal jobs in the Indian economy.
Not one of the highest.
Okay.
It's an all-time high of 1.87 million added in July. It was 1.01 million added in June, and it was 1.82 million added last July, which was another high. So formal job creation is at an all-time high in the month of July. Out of these, 58.4% were brand new joinees in the 18 to 25 age bracket. So that many new jobs in the entry level of the new youth that is coming into the job market have been created in the formal EPFO job market.
Okay, it's important to point out that they may not be first-time employees, but they have now formally been inducted into employment system. They could have had jobs prior to this, just that they were not enrolled into EPFO.
They could have, but 58.4% who are in the 18 to 25, if they've had a job before 18 years of age where you're not allowed to work actually legally, probably, but otherwise, so it is an indicator that new first-time jobbers, it is as high as almost 60%.
All right, lovely. Good news there as far as EPFO data is concerned. More number of jobs added than ever in the month of July this year. But moving on from jobs perhaps to a place where people are leaving jobs, Akasa Air, pilots have resigned, but good news coming in for Akasa Air because they've now been given permit to fly international.
Absolutely. So I think a lot has moved in the favor of Akasa in the last 24 hours. When we were here speaking yesterday, Shweta, I think the story was very different. The story was about Akasa wanting to take the 43 pilots who have resigned without serving notice period to court and wanted the courts to intervene and get them back to work because the airline said that there was a 6-month stipulated notice period which the pilots are meant to serve because it takes about 7 to 8 months of training for any new pilot to be inducted to fly the Akasa fleet. So 6 months of notice period not served by as high as 43 pilots who left almost at a day's notice, which eventually led to grounding of about 24 flights a day. Extrapolate that to almost 700-800 flights every month were getting grounded when it came to Akasa. Now, yesterday, after I think this news came out and even we discussed it, the management of Akasa, Vishal Dubey, the CEO, actually wrote an email to employees stating very clearly that they are uncompromising when it comes to keeping the aircraft reliability and operations completely in check. They are not shutting down, denied those rumors of the airline shutting down, and said that there are enough and more pilots already at various stages of completion of their training to come and start flying as many as 30 new aircraft. Add to that the new order book, the new order issue by Akasa saying that there are going to be aircraft orders in 3-digit numbers. So that means that's going to be a minimum of another 100 aircraft to be ordered by Akasa to be inducted in its fleet over the next few years as soon as starting December this year, end of this calendar year. So, so that is one part of the good news, that Akasa has denied rumors. It is not going down. In fact, if anything, it is expanding its fleet, getting more aircraft. There are pilots in various stages of completion of their training who will come and fly, more number of aircraft. And it gets a nod from the Civil Aviation Ministry to fly international sectors. So the sectors which the airline is going to concentrate on initially once it starts flying internationally are going to be South Asia, India's neighborhood, Southeast Asia, as well as Middle East. So I think this entire Indian Ocean subcontinent is likely to be covered by Akasa Air in coming times. Rumors of the airline shutting down vehemently denied by management. New pilots getting inducted after completion of training. At least another 100 new aircraft will start getting delivered starting as early after the order is placed by end of this calendar year.
And what happens to the pilots who have resigned, who have been taken to court?
I think that is something which is going to play out in the courts. Remember, the court matter is scheduled both in the Bombay High Court as well as the Delhi High Court. There is a precedent of any organization not being in a position, not being given permission to be in a position to thwart the progress of any skilled employee to make a living. And these arguments, fights over notice period have not really seen much light in favor of organizations. In fact, all previous rulings have favored employees, and pilots being employees, it's unlikely that even if this precedent was to reverse, it's not going to happen anytime soon. So maybe that long run battle is going to continue, and you may have a situation where there could be some penalty imposed on pilots, maybe salary in lieu of the six months of unserved notice period to be remitted back to the airline. We may see issues like these eventually getting resolved, but I don't think pilots who have gone are coming back to fly the grounded fleet. Akasa will have to wait for the new batch of pilots to get qualified, trained, and come and fly the new aircraft.
All right, and that fight will be fought in the legal chambers now, as the matter is pending in front of Delhi High Court and Bombay High Court. So Akasa, some breather there for Akasa as far as the international permit from Civil Aviation Ministry is
and I think add to that the vigor of the existing pilots, statements coming from there also. In fact, Business Standard, if I'm not mistaken, today had a lovely headline which said, "We shall overcome." And I think existing pilots in Akasa Air have also committed their sort of willingness to go above and beyond the call of duty and ensure that that the
no more flights are cancelled,
stays pretty much afloat or in the air.
All right. Another startup, since Akasa is a startup, another startup that continues to be in a lot of news of late, but another news in fact coming in from Byju's is that they have a new CEO. While the previous CEO has said they're quitting for personal reasons, this is a strange, interesting coincidence.
Yeah, I would call it that. I think you put it well. It's a coincidence, or you could call it a course correction, you know, as you see it, and as the investors of Byju would see it. So where we stand today, Mrinal Mohit
has quit.
And has cited personal reasons, personal aspirations that he wants to pursue. And we've got Arjun Mohan coming back to Byju's. Arjun Mohan had been with Byju's, had spent close to a decade at the company before moving on to competitor Upgrad, where he spent about 2 years, developing business for Upgrad. And thereafter, after quitting Upgrad, had consulted with other edtech firms out there. It's a sort of homecoming for Arjun Mohan. But interestingly, when Byju Ravindran himself used to coach students, he had two bright students, Mrinal Mohit and Arjun Mohan. They have both been taught, tutored by Byju Ravindran himself, who has invested, of course, his time, his resources and his faith in these two professionals to have led the company. Now, of course, we've seen that that the company has been unable to make profits. In fact, its valuation has been cut down. The books have not been audited for almost 2.5 years now. We've seen the resignation of its auditor. And
the term loan B that it continues to grapple with.
$1.2 billion term B loan. At a situation now that it wants to sell 2 of its businesses to repay part of that loan or all of that loan. So the company has gone through a flux. It's gone through a churn, an unfortunate one. But then there seems to be some course correction with a new board also now in place. You've got the likes of Mohandas Pai, you've got the likes of Rajneesh Kumar on
and the new auditor.
You've got a new auditor on board. You've got Byju Ravindran physically breaking down into tears and sort of, you know, reassuring employees, investors that amends will be made. And perhaps this change of guard right now could be seen as another step towards making amends. Now, we don't know if this resignation has been voluntary or this resignation has been influenced, given what the company has gone through in the last couple of months, if not about a year or so now. And it seems like, yeah, hopefully the company should course correct, should emerge out of the troubles that have engulfed it, and hopefully lead to profitability at some point.
All right. So Byju is, of course, treating a very careful, narrow path there. Mohit is out. Arjun Mohan is in as the new CEO. We'll, of course, have to wait and watch how Byju's fortunes will turn around, if at all. But shifting focus now to a story that is playing out since yesterday by the way of WhatsApp payments and this is interesting. I think we need to spend a minute or two in this story. So WhatsApp, what it's trying to do is it's trying to not just expand its payment system, it's also trying to get local traders, partners in India, where people like you and me, users of WhatsApp, can buy items directly on WhatsApp. And in order to facilitate that, the payment system has to expand. You can no more just use WhatsApp to scan and pay through UPI, which is third party, and it takes you outside of the WhatsApp. It has now integrated UPI into its own interface, albeit a competition, but hoping that people will be able to make payments through Paytm, UPI, GPay on WhatsApp interface.
It seems to be a case similar to that, Shweta. As I understand it, and I don't know, because, you know, when I saw this story emerge yesterday, I went to WhatsApp and I tried to see what are the payment options available. I think it's yet to be rolled out, but what is available right now is peer-to-peer payment. So I could transfer money to you using WhatsApp, or I could transfer money to another individual account user, but I'm unable to transfer money to a business account. Now, every time an organization logs on to WhatsApp with an organization number and registers itself as a business, as a user, as a consumer, I'm unable to make that transaction within the WhatsApp platform. Now, with this new rollout, which is likely to hit India, and India being among the first 3 countries to get this new rollout feature from WhatsApp, suggests that as a business, if I am interacting with you on WhatsApp, and if I have purchased a physical item or a service from you, then you would be able to raise a QR code or raise a payment process back to me, and using the platform, I will be able to make that payment to you. Now, I believe integrating a GPay or a Paytm or any other third party within the WhatsApp ecosystem is going to be challenging.
Okay.
I'm not sure how data protection will work, how how security between these multiple platforms will work. So as I understand, and again, I'm yet to see it because I don't think it has rolled out. As I see it, it's going to be pretty much like a payment you make on a Swiggy or a Zomato or an Amazon, that you transact there, but it takes you out of the platform to make that payment, and then you tap a button and you come back to the platform. So I don't think that integration is happening within the platform. That integration will still happen outside of the platform.
No, actually, that's the change. That is the change as per the press release that it's been put out by Meta, the parent company, that you earlier, when you had to make a payment, you would have to come out of WhatsApp
so
and then make the payment.
If you're a seller, you would send me a QR code.
Yes.
I would have to download that QR code. I would have to exit WhatsApp, open a payment application, scan that QR code or upload that QR code and go back and make that payment, right, on the third party. I think now that process will be seamless, but you will still have to get out of WhatsApp and go to a third party. You won't have to physically scan it. I think the interoperability will come by way of you generating a transaction to me, and when I hit pay, it'll give me an option of which payment gateway or payment app I want to use. I click on that. It takes me there with the amount fed in with you as the receiver already showing on that platform. I make the payment done, I come back to WhatsApp seamlessly. I think that's how it's going to roll out. And add to that, I think WhatsApp is also looking at integrating debit cards and credit cards,
which is interesting.
Not just QR codes, not just digital wallets or UPI enabled payment mechanisms, but even traditional debit and credit card may now be added to WhatsApp for you to be able to transact within the platform using those options.
Absolutely, and I think that is more exciting.
But it'll still need a payment gateway, as I understand. It'll still need
and it has tied up with Razorpay and Byju for that.
Byju, etc. Those will still be needed. So the fact that they are there, it means it is a gateway which is integrating your platform with other payment platforms. So if the gateway is there, I think you're still moving out of the platform temporarily, completing that transaction and coming back to the platform.
All right, but interesting, you can add your credit card, debit card on WhatsApp to make payments. The feature's been rolled out, but it's not available. I couldn't use it this morning, so perhaps in a day or two.
Out of the 500 million users of WhatsApp in India,
100 million
just
is the cap.
about 100 million users are right now enabled to use the payment option. I think I'm part of the 400 million.
Okay, and that of course is the government cap. So the cap remains, only 100 million WhatsApp users can use WhatsApp payments as an interface, but interesting rollout there from WhatsApp in order to expand perhaps its business opportunities in India. But before we end this bulletin, a very interesting story I think we discovered this morning, and that is by the way of new DALL-E, which is now going to be integrated with Snapchat as
ChatGPT.
I beg your pardon, ChatGPT, another creation from OpenAI, which essentially means that up until now, if you were to give a command to ChatGPT, you would get text responses, but now you can also get text plus visual responses. Very interesting. I hope we can play up some of those visuals on our screen, but what's happening here, Amit?
Yeah, up to now you could get text, sound and software programming responses from ChatGPT. OpenAI had another service called DALL-E, which created images. Now they have married the two. DALL-E 3 is folded into ChatGPT Plus. So it is a pay service. You will have to pay $20 a month to use it. But now these two services are married. DALL-E 3 is a whole lot ahead of the earlier version. The images that it can create are breathtakingly lifelike. The launch comes one day after the launch of Google Bard, which was launched on Tuesday. This was launched on Wednesday. Tuesday, the launch, Bard was basically just connecting the other services of Google, like YouTube and Gmail and Doc with the Bard. But DALL-E 3, the images that at least that have been put out that it can create are extremely creative, extremely precise, and breathtakingly lifelike.
Okay.
This comes after two other competitors who are way ahead in the image creation game, Midjourney and Stable Diffusion, had updated their game in the summer of this year. If somebody goes to the site of something like a Midjourney, which DALL-E 3 is going to compete with, as children we used to play, in my generation we used to play a game called Meccano, which was full of screws and nuts and bolts, actual metal ones. the images these people create look like that. So these are AI created images without any physical on the computer. So it has gone that far.
Just look at look at the commands. I mean, simple. Oh, can you show me Larry being kind-hearted? You know, this is an illustration that DALL-E has created and released. OpenAI has released, where there is actually somebody who is trying to recreate a child's imagination, and that child's imagination comes to life. You're talking about a hedgehog with a sunflower, and you give one chat input and you have an image created. You like that image, you say, hey, that looks lovely. Can you create more of these? And there are more of
images.
He says,
and then there's a story.
My child calls this Larry. Can you show me Larry's house? And you have Larry's house popping up. And then you say, can you create a story around it? And DALL-E actually creates a story, a completely illustrated text plus visual story. So if you ask me, I think now the only tool that you need in today's world is imagination. If you have the imagination, and if you can articulate that imagination in very simple colloquial terms to a chat engine like ChatGPT, it can create magic for you.
Absolutely.
So gone are the days, I think, of great authors getting their books published. Gone are the days of illustrators, you know, physically drawing, sketching, creating every frame.
Going to put a lot of people out of job.
Yeah, but then imagine how much more content you can create.
Absolutely.
Everybody can become a content creator. So earlier, this old boys club of great experienced graphic artists and video editors can now be challenged by perhaps somebody as young as 5 years old who knows how to type one query into a laptop, and everybody's using laptops in school today.
And it is not just imagination that you need. AI is not firing imagination. A child, like Karthik said, can type in something. He does not know what he's going to get, but he may get something that he had not even thought of. So, I mean, a hedgehog in a sunflower, you don't know what he had typed out, or he didn't even have the image what he got. Okay. So what I'm saying is AI is even firing imagination.
Absolutely, firing imagination. Hopefully, I think going back to the old adage, not so old, come to think of it, that you don't have to you don't have to have all skills to be in job in future to come, but you need to know how to operate AI.
You need to know how to chat.
If you've got to be want to be employable,
with the likes of
AI.
ChatGPT, the ease with which AI has been democratized and is available at what price point? $20 a month or something, right? $20 a month. Anybody can become anything from a speech writer to an artist to an author to whatever.
Everything.
Now, the only problem is how much of that is actually yours and how much of that belongs to somebody who has
you've
taught
got
this,
to know how to give right commands.
Who has taught, how much of it comes as part of your original imagination, and how much of it really comes from what the machine has learned using reference points of what other people have actually physically created, which is out there on the internet. Absolutely. So I think this whole new debate of copyright infringement and who owns the eventual rights to what gets dished out by way of ChatGPT or DALL-E or the two combined or Google Bard is going to heat up as we move forward. Okay. But anybody, I think, today can become a content creator.
Absolutely.
From the press release that OpenAI has given, they have limited the ability of DALL-E 3 to imitate styles of other real artists. Okay. They say that.
Okay.
So to that extent,
I mean, the name in itself is an imitation. DALL-E is DALL-E. Right? DALL-E.
So DALL-E.
So how original would it be?
They are saying that at least.
Okay, DALL-E, and I'm also being told enough of DALL-E. Perhaps I think it's time to wrap up the show. Well, that's all we have on the show. Thank you very much for watching.
Do you have a very simple SOP?
If you put at the mango tree's root, it becomes sweet mango.
Spokesperson like Sania Mirza written about more than the women's cricketer.
Journalist, for some reason, doesn't like an athlete. The narrative is very different.
So why have people been so much enticed to come and take over your businesses?
लड़की सुंदर होती है तो उसके पीछे बहुत लड़के आते हैं.
To us normal people, the doctor is somewhere in between us and the God.
When a patient's mother touches my feet, begging to save her child's life, I don't feel empowered. I feel humiliated.
Is it fair to call you an Indophile?
Very much so.
What about China?
A local problem is a global problem.
Suppose if you had donned the seat of chairman, maybe by now Oxford or Cambridge would have had chairwoman as a legitimate English word.
She is the most qualified.
Giving good value system to children was more important than career.
How do you deal with success and failure?
First thing is to clearly know what you want in life.
Who is Lutyens Media?
It is a bunch of people.
What has Khan market got to do about
Just
it?
a function of its location.
Duologue with Barun Das, world premiere on Connected TV from September 22nd to 29th at 10 p.m. Only on News9 Live, India's first and only digital exclusive English news stream for Connected TV, supported by Alliance Broadband.
BrahMos, stealthy, lethal, precise. It flies at 3 times the speed of sound and cuts through a warship like a hot knife through butter. China's navy has threatened its neighbors, and they are turning to the BrahMos for protection. The warship killer. This and more streaming on world's first news OTT, News9 Plus. Download now.
Akshay Kumar makes his Marathi film debut in Mahesh Manjrekar's Vedat Marathi Veer Daudale Sa. What's inspired Khiladi Kumar to foray into new terrain? Playing iconic Maratha king Shivaji Maharaj, he's jumping on a bandwagon that spells magic on the box office. Why are filmmakers in a rush to chronicle the life and times of Shivaji Maharaj?
Why do we feel the hunger, the need? Why are we compelled to make a film on Chhatrapati Shivaji Maharaj? And that too so many films. For a simple reason, he was the people's king.
So I think there's this herd mentality in the film industry. One film clicks, then there's a line of producers who announce films with similar storylines.
Personality that has not been adequately explored on the big screen.